The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. I was actually here earlier for Larry's show. Larry had a voice problem, so I was able to fill in for him. Well, welcome to 2016, first trading day of 2016. Probably if you're listening to me, then you are a little bit aware of the fact that the market was a little down in the pre-market, down about 350 points, but now the Dow is actually down 450. S&P is down 52, so we're breaking the 17,000 level. To me, that was sacrosanct. Day is young. We'll see if we're able to rebound above it, but closing for 2 out of 3 days below 17,000 to me will be a trend change. It was very interesting that the 9-period moving average of the in the monthly chart of the Dow closed just above it, whereas back in December of 2008, it closed just below it, and that set in motion a whole bunch of sell signals. So I didn't want to be premature. It was not a great close the last 2 days, Wednesday and Thursday. Needed to see what happens today. We'll go right into that in a moment. So the Dow's at 16,961, down 462. The S&P is at 1990. Down 53. The comp index is down 160. Earlier on, it was down 114, came back to about minus 98 or something. Now it's down 159 at 48.48. The more I went through charts over the weekend, the more I suspected that while there could be some leadership, and we were looking at some stocks that were actually leading quite nicely, we still have a few of our long positions, but back at the ranch, this is just a brutally ugly day. That's all that you can say. Now, a couple of things that are going on. When I looked at various charts, my concern was that major stocks like an Amazon, like a Priceline, you can even include an Apple in this, even though we've been negative on Apple for a long time. You can include an Apple. You can Google. I looked at. There were very few charts of the leaders, but it was also possible that some of the laggards could find some support. And ironically enough, there are a couple of laggards here that are in fact holding quite well. But the day is young. The week has barely begun. Let's see what happens. You're looking at my chart right now. It shows the E-mini down 52. It's right on a trend line support. Actually, let me be very clear about that. The trend line is right there. That trend line says today 1979.30s is really key. And we're where? We're 4 points away at 1983. There is a left side low of 1983.25 based on the 120-minute chart that says that by the 6th, I think it is, by the 6th of January, we could be testing that 1983.25. Believe me, we've already smashed through two other support levels. One was 1995 and the other was 1991. So it's going to make it really tough. And I already drew when I was doing Larry's show, I drew in the arch formation. Now I have to draw it with an even lower arch. 2008 is the 9-period moving average support resistance, and that's way up. Let's go on. This is very interesting because look at the dollar, DXY. The dollar is right now at 98.85. It's up 21 cents. Am I current? Could somebody give me the most current level? I'm always just a little bit behind. So that would mean that we are at a double bottom at 97.81, 97.80. Okay, so that's A, B, C, D, E. We've already done E and made a V-shaped formation. Hey, this is very interesting. So if the dollar, even if I'm behind, it's up 21 cents. This is to say it's unchanged. The fact that it's not down 60 cents is very important for the dollar. Now let's look at the gold. Gold is up. It was up 17 earlier. Now it's up 17 again. It actually went higher. It went not 17 at 10,078. It went all the way to 1,083, round number high. So, and that was a leg D. Oh, you remember we did this? I did this during Larry's show. I showed the gold contract, and it said there's a left side, right side price time match, which came in exactly to this bar right here, the bar of 10 o'clock. And that said that 1081.40 should be hit within a bar or two. If not, it's going to go all the way to the 5th of January, tomorrow at 5 o'clock. Instead, we've already done that. Now we're pulling back from leg D. Very strong technicals. Let's see how they hold. I would have expected gold to be up at least $28, but more like $37 at this point with this kind of action and reaction. So that's a little strange. So we'll be watching to see. I need to just discuss one thing for very quickly because timing. This show has to do also with all the different time frames, but I also like to do the near term for those of you who are trading. This bar here, because we smashed through the left side support at 1995, earlier on, back at the 720 low, when we went to the low of at 10 minutes to 10 when I was on the show, I said that was a leg A. It was looking okay, but it really needed to take out 2003.75 to start a decent rally. Now we've got something else. We've got a one-to-one expansion, more than a one-to-one expansion right now at 1980.25. Oh, I'll take the next break to do some work on this because I don't want to talk it out. I want to actually draw it. So I'm going to say right now, if 1980.25 is not taken out, I give it a half a point. 1979.50. If that's 7.75, if that's not taken out, and we go above the candle, this past candle of 1986.25 that was made at 10 past 11, that's going to say that we could get a V-shaped rally and some, for the very first time today, then there'd be some veracity. Let me just show you the, I haven't seen it myself, I'm just guessing. The 5-minute is just starting to cross over positively in the E-mini. And if the E-mini at 9% in the stochastic can get to 12%, as the resistance at 1986 is tackled, that'll be the first sign that we're saying perhaps it could be a rebound at this particular stage. All right, negative action, and I also need to do this real quickly because it happened already. We've gone down to 16,957. That means we've taken out the low that was made from this pink support level of the channel. Is this going to replicate one of those rebounds that takes you back up again? And is it the rebound that would just give you maybe a 30% rally from the low of this channel? We'll talk about that in a moment. So I showed you the dollar, I showed you gold. I need to show you bonds. We'll look at some other things when we get back. Basil Chapman, Tiger Technicians Hour, very critical. We've closed 2 days out of 3 underneath 17,000. It's a real problem. I'll be right back.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Got an email here from Paul. CNBC is putting a Band-Aid on all the problems in the markets. The Band-Aid is not big enough, though, to mask all the problems facing this market. He says the credit markets are going to implode next, but the real crash will be baby boomers all cashing out at once. These people have sat and watched many ups and downs, but this time they won't watch, but they will be running to the exits all at once. Just my take. Take it for what it's worth. Yeah, you got some very good points there. There's no question about it. At the New Year's Eve party that I didn't do any survey, but I do it as kind of a background mental thing. Not a single person was talking about the stock market. What they were, there were a lot of physicians there, and almost all of them, to a person, just screaming and yelling about how absolutely abominable the medical, the whole vernacular of the medical information. It's just data. Someone's good friend was at the meeting with Obama way back when all of this was discussed in terms of data. And the stance that Obama and his team took was, we want data. That's all we want. We want data. We want data. We want data. And that's all they're interested in. And every one of them said that they are up. They see the patients for X number of hours, and then you've got to double that again. Not just add 15 minutes, but double the time that they see the patients. Much more than double. In fact, it's pretty much like 40 minutes to 45 minutes or more, because of all the junk that they got to put into the computer for all the ITs, for all the information. And that they can't look at the patient anymore. They don't have time. They're not allowed time. So they're looking at the computer. They don't see the patient. They're afraid. These are the old-fashioned people that looked at, they were the real doctors, the ones that you could talk to, the ones who spoke about the family, who understood that what the turmoil was going in many of their lives and all that. No, there's no time for that at all. And none of that will show up on the forms. It's all about you got bitten by a snake. What kind of snake? What color was the snake? I mean, it's unbelievable. It's as if the IT were let loose, and there were physicians in Epic and all these companies that were database companies. But in fact, they were just told, get as much information. And of course, who are they getting it for? They're getting it for the insurance companies and the lawyers. It's got nothing to do with medicine, nothing whatsoever. So there you are. All right, so that was that. But nobody, only one person, my usual guy that I always speak to every year about the market, he just said, it was a lousy year. Don't even want to discuss it. And not only did he not want to discuss it, this is a guy that's been in the market all his life. He's done very well. And he just said, this is not a happy camper, lousy year. So, yeah, there you are. And yes to L. And the next thing is that I want you to mention is can 2016 be a year like 2008? So now this is the question. I spent a lot of time over the weekend going through I tried not to answer any emails, anything. Just I had grandkids around, but I took a lot of time to look at the charts, but also I did my socioeconomic, political analysis that I always do. We've met almost all the criteria that I discuss, and that is the criteria of skyscrapers. I've spoken to you about the one in Jeddah that's going to be 1,000, kilometers or something. It's unbelievable. Every single one of the criteria that I discuss that should see a major, major market top is there, except for two. And at this point, I'm just gonna hang on and say I'm waiting for those two. And the one is, in this recent rally to the all-time high, and let's just say the May high of 2015 in the Dow, I did not see any market hysteria, but I absolutely saw a mentality that had the symptoms of hysteria when you're talking about the IBB, that is the NASDAQ biotech sector, making its high at 400.79. That was where, in July? Yep, July. Almost everyone to a T. And I just got another email saying, when you recently spoke at MIT and you took a survey of the crowd who was bullish and bearish, many bulls raised their hands and only 2 people showed that they were bearish. I find that very telling of what's in front of us. Yeah, that's another thing I kept in mind. I didn't want to make a big deal about it, but absolutely the majority of people that were in the market were bullish. And my question this time, I've never asked this question. I said the question was to all those people when I gave this speak at the Boston Investors Group here at MIT, Massachusetts Institute of Technology. That's where the meeting was back in, I don't even remember when it was, a month ago. I said, I'm not interested in your emotions. I'm not interested in anything else. In your portfolio, are you mostly bullish or bearish? And a majority of people raised their hands to say bullish. And there were 2 people that were just their actual portfolio was mostly bearish. And I thought that was telling. Now let's do a couple of things here. You see the IBB down, and I should mention we're short from way back. On July the 24th, we went short at 391. It's trading at 327 right now. There's an arch formation, and it actually made a D in the Chapman Wave weekly chart. But it isn't breaking down, and it'll only be really breaking down when this trend line, and this has been a major sector. I mean, you've got to admit that look at that chart. This has been just a core holding for a lot of fund managers and a lot of folks. And that says to me that if the IBB, my contention is we've made a hat trick top and that you will not see new highs in the IBB this year. That's my contention. All right. And the other thing is that if we were to break 284, which is the low in August, it's all over. That is done. You can have fabulous rallies, but there's lower lows and lower highs is in store for the IBB. And that's been a major sector. So what do fund managers do? They kind of pull out, and then they put the money back. And sometimes, like I think they were doing it right here back in mid-December, I think they were putting money back in the IBB thinking, okay, we're done. But here's the chart. And it says very simply that this long-term trend line in the weekly chart, let me show you right here, this long-term trend line been broken a few times, but never closed below. Closed below on a weekly basis below this trend line. Let's call it 311. You go to 300, close it at 311 or lower, still another 15 points. But I'm just saying that if there's a close on a weekly basis, you've just got to be really careful of this sector. Okay, that's number one. And so I'm looking at different sectors, and that's where there was not hysteria, but there was a total conviction that that was the place to be. All right? So what was the other total conviction? We'll go to real estate in a moment. I'll be right back. Dow's down 450, S&P's down 51. Huge day. Worst first day, trading day that I can recall in a long time. We'll be back. First trading day of the year, that is.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back looking at that little chart of the 10-minute E-minis. This is not a power move to the upside, not yet. It just is a little bit of a V, but no way. It has to. If it fails, this is going to not be good at all. This will be a most unusual session. But you need to see some kind. Oh, that should be in blue, right? So let me get rid of that. Remove text. Let me just go back to formatting here. Just give me 1 second. And we're back. Okay. So this You should have seen a second bar equally as strong. Well, it's still young. The 10-minute bar has got a little bit to go, but not good, not good. Okay. Now, I do not want to sound like I'm Pollyannish to the upside. I've been making it quite clear that it is price movement that is going to determine it for me, and that if we replicate this pattern right here, I thought there was a chance that we could break it for the first time and have a little spiral to the upside, test close to the all-time high, and then we get this massive move to the downside. No, we've done it earlier. If it does it earlier, you have to look at the pattern that's formed before and say that this trend line in the Dow, this channel line, perfect channel line, if there is a close today above it, you've got to consider that that's a possible, that's a positive event, and that you could now test this trend line, the dash trend line, in between there with a real nice bounce, oversold bounce. But if this is going to persist, then what you will see is an ugly candle tomorrow. And all of a sudden you're in there's nowhere. Look, 16,887 is the next level of support. After that, it's all the way down at 16,000, I think. Yep, 16,013. Just a huge, huge gap. So that's the reason why I've said that for the portfolio for my subscribers, we are short and we are long. And now we're a little less long. But some of the longs, I'm a little surprised, have actually held up a little bit better than I expected. And that's okay. But parameters are the parameters. I don't care. That's all I'm looking at. If price, the question over the weekend I had was, if you're expecting a bigger move to the upside, this is really bad action over from Thursday into the weekend. That is last night. And can I disagree? Of course I can't disagree. It's fact. That's true. But this is the issue. The issue is that patterns repeat over and over and over again. Look how negative it was when you came down right. Look at the stochastic right here. MACD was not too bad in the stochastic, and then all of a sudden it came tumbling down. But it also managed to make a little arch reversal. And that arch reversal is, if there is one, that's the place. If you haven't gotten short, more short, then that probably would be the place to look at it. But I want everything to play out. I want to see a move. I don't feel 100% confident. I feel 90% confident that at least on a very short-term basis, there should be some kind of a rally here. And that's the rally that's going to give us a lot of information. Let's see the 120-minute chart. Well, it doesn't give me all that much information. I'm just doing it based on chart patterns. So let's leave that, and we're going to go to the next thing that I wanted to discuss. I had mentioned the dollar. I'll just quickly do the dollar again. Now I can see if the dollar at this point is up 48 cents. Let me see what mine says. The 35 cents. Yeah, you see, there's something wrong with this picture. And that's the reason. One of the reasons why I said I don't want to become emotionally involved. I want to look at the chart formations, and until levels are broken, either up or down, we are just in a trading range. To get excited at 17,000, now we're at 17,007. To get excited about this market at this particular point, I'd rather be looking at specifics and saying this stock looks quite good. It could rally a bit, and if it doesn't, we'll put in a tight stop. But this one looks bad, and it looks like it's going to go down deeper. I'd rather be doing it that way than just making a broad statement, and I'll explain why right now. If I'm looking at, I'm going to go to the New York Stock Exchange, NYA.X. Look how bad this weekly chart is with the H pattern. And look at this. On the monthly, we're finally breaking that support. I should technically lower this, make it a new trading line. I don't really want to, so I'm just going to do it in background. I'm going to go from there to there and say, okay, we've broken the major trend in New York Stock Exchange, and this is the broad one. And this is the one that I kept saying, I believe this is the old stocks, not the new stocks. So you've got to respect it, but you've got to put it into the category of we could, and the reason why I thought that the Dow by itself maybe could make that new high is that I wanted to have some kind of a sense of the monthly chart and the possibility of that Elliott wave 4 going confirmed to a 5 in my work. We haven't done that yet. And the reason why I said it's so important to be monitoring the NYA, the New York Stock Exchange, is because it's the kind of super tanker, and it's right just about on the 200 period exponential moving average, and it says on a shorter term basis that you can go a little lower, but at 9,787, that's 50 points lower, you'd be talking about something that's starting to break down, and it says a full retracement to the August low could be to 9,509. And yes, you could get a bounce from there in the pattern that goes from an H to a cup formation. But that's a lot of points down from here. Even though we're down 218, another 50 or 60 points, that really kind of sets the pace for that monthly, because the monthly technicals are terrible in the New York Stock Exchange. So I don't want to get out. I don't make it sound like I'm overly bullish. I don't want to make it sound yet as if I'm going to be overly bearish. But believe me, I don't see any reason at this point to be looking at stocks like the Apple that we were talking about. Apple has rebounded a little bit on the day, but there's that H pattern. There's the same kind of pattern we're looking at in the monthly. Look at this. Here we go. Monthly says you only need to go down a little bit more, and Apple starts to break out the monthly support. If it goes to 98, I've said all along that if Apple starts to trade under 100, it has a real problem. And I still think it's making a hat-trick top, meaning monthly, weekly, daily. Okay, so we've got a couple of those things out. Now, I spoke about the dollar and the dollar strength against market weakness. That's a little unusual. But wait a minute, we're looking at bonds up $1.20, 30 seconds. Nice move, a little bit of a trend line right there. Once hit, twice hit, 3 times, not yet hit. Yep, almost hit today. If the bonds break 155.30, if bonds break into the 156.5 area, all of a sudden, you're looking at another chance for a retest of the 158 level in that thick downtrend line that goes back in the weekly chart. And that would suggest very strongly that this market is going to go lower and bonds are going to go higher, yields are going to come down. Isn't that interesting? So let's put it together with TLT. TLT also has this trend line. Its trend line is a little bit different. I'm going to make it right there. I like to use the body of the candle for the first one if I have to. So the first level of resistance will be at 122.70s. If it takes that out tomorrow morning, let's just say the bond's up again tomorrow morning. If it takes it out, this candle high of the 21st of December at 123.78, that's the one you're going to watch very closely. I don't really care. It's the weekly chart. Because once you start to get into the 123.30, 123.50 level, you're starting to break that long-term downtrend line. Hey, I'll be back. Basil Chapman, Tiger Technicians Hour. Good comeback. Dow's down only 423 points.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back, and now I got a couple of emails. Wow, a lot of emails about a lot of texts and emails about the doctors. Absolutely. Wow. Yeah, just, I don't even know how. Whoa. Basil, boy, are you right about doctors? More below. My doctor never looks at me while I'm in that small room. He has his face completely on his computer. When I talk, I don't believe he's listening. I hope your wife is like the old-time doctors. Thanks for doing Larry's show. Yeah, you know, I couldn't even tell you what's going on. I mean, my wife is one of the old-fashioned doctors, and she still listens to her patients, and it just means that she has to work. You know, if I said to you it's an 80-hour week, I'd actually be exaggerating. It's probably more like a 90-hour week. It's unbelievable. Anyway, Goldman Sachs down 5 at 175. A question there, Judy wanted to know. Yeah, this is giving back. There's that H pattern. This is so important, and I'll tell you why. The question has to be, I just keep going back to the chart. Look, I'm going to go back to this chart, and now we've come off the lows, and we'll have to see what happens from here, because my thinking is, in the breakout, too many questions, I didn't have a chance to actually measure the move from the high of May in the Dow. That was May the 10th, was it? What was it? Let me just have a look. 19th. Okay, I'll do it now. So we got, there it goes. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 43, 44, 45, 47, 48, 49, 50, 51, 52, 53, 55, 56, 57. So 56 was where it went a little under, and then it spiked back. 56, 7, 8, 9, 60, 61, 2, 3, 4, 5, 70, 71, 72, 73, 74, 75, 76, around about 76 sessions, and then we went smashing down into the oil, broke the level on a closing basis. So we've got way less right now. We are in that 50-ish, 45, 50-ish area. So there could still be a little bit of a bounce, and there could be a bounce to make an arch formation before we can take it out. But I have to wait for the close today. That's number one. Number two is, within the context, that is the pattern that we've been looking at. This left shoulder, the head, the right shoulder. It's like an inverse head and shoulder that could break down and create another arch formation. It's a complex pattern. And I'm just making it as simple as possible. 2 closes below 17,000 in the Dow says, hey, 2 out of 3, that is, within 2 or 3 consecutive days, is a really negative thing. When you're going to the monthly chart, well, we've just begun the first trading day of the month, And you've got Goldman Sachs, looks like it's made a hat-trick top, unless there's an H pattern that's really successful, as it holds 168, was that? 167.49, and it's 175 right now, down 5. So we've got levels to watch. That's why it's just so important. And look at the VIX index. The VIX right here. And the real issue is, if I get the signal that says we've gone almost immediately from a sell signal to a sell mode, it just means we're going to be shorting for a while. You know, you haven't really lost anything. What? The all-time high is 18,300, and we're 1,400 off that. Not even 1%. Not even 1%. Not even, what is it? Yeah. Am I right? No, 1% would be 160. So 10%. Yeah, not even 10%. It's 8%. You can always short if you think we're going to be going down 22%, if it's going to match. So that goes to the question of, there we go. Gringo asked, no, it wasn't him. It was at the other question of whether, GT, SPX, can 2016 be a year like 2008? Well, I was hoping for a higher high, so I don't, as I said before, I've got two criteria. One is, and I was speaking about the, talking about the market. I was talking about the May high. This is such a sideways move. Yes, we did have a little bit of a sideways move in 2000 before we tumbled. I would just put those levels. I'm just telling you now, we go into the 16,900s. I can be, I can talk about it in a negative way. Let's go to Max in Fort Lauderdale. Max, how are you?
Yeah, good morning, Basil.
Good morning.
Because of you, I always check the trend during the day and even at night. There seems to be some divergence between the trend and the market. I've noticed in the past there has been, but it'll last a day or so, and one is going to verify the other. What do you think about the trend being so? I expected it up to be over 3.
So this is the first time. There was a success on Thursday, but today will be the first day. If there's no decent, very strong rally, this will be the first time in a long time. I'm going to show this thing right now. I've X'd out, if I can find it right there. There were 2 days in a year that we had, maybe there are 3 altogether, where there was not a Chapman wave trend gauge reading that successfully did what it's supposed to do. So this would go down as another one, and that's very rare, but it could be one. But here's the real question. The trend, the short-term trading index right now is trading at 1.14. The low of the day was 0.68. I don't know where it got 0.68 from, unless it, I don't know how that worked out. But look what's going on. With the Dow, this is the sharpest down move we have had in a long time, and it's down 424 points. S&P is down 46, and the short-term trading index is only up at 1.11. It should be up at 2.11, if not higher. At 3.10 the day on Thursday, no, on Wednesday, it went to 3.10 when the Dow was down, 150 points. So something is really weird here. That's number one. And number two is there is a catch-up sometimes with the trend. So in other words, it isn't reflecting today, but if tomorrow is a negative day, it'll suddenly soar to the 2-something level. So I didn't look at it earlier, but you've brought it to my attention, and I'm just saying to you that it is very strange. And I'm not sure how to explain it, because the makeup that Richard Arms, who created it, put into it is the highs over the lows divided by the gainers and the losers. So the calculation is such that it's a little weird to be seeing this. The only thing I can think of is because we gapped down so big that there's a kind of a mix between some people buying and some stocks have come off their low. They haven't done great, but they've come off their low.
You think this is a false breakdown today?
I was going to get to that point. And that point was, I thought I'd begun the point, so I'll finish it. And now I'll relate it to the trend, because what I was going to say is the reason why. Oh, I think I spoke about it in Larry's show. Can you hold on?
Yes.
Okay, I think I started it then. I'll try to regroup with my thinking here and talk about it in a moment. But yes, we'll be back. It's a good point. I'll be right back with Max in Fort Lauderdale, Basil Chapman, Tiger Technicians Hour. Ooh, the Dow's down only 400 points. S&P's come back. It's only down 45. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
We're back with Max in Fort Lauderdale, down 411 and S&P down 45. So this is really what I'm looking at. Let me just quickly go to this 10-minute chart for those of you traders. So we've gone to leg E. It'll be a peak E up. Yeah, it'll be a peak E if you don't break above 1990.20. No, 1990. That'll make a peak. If you go above that, just extends leg A. This is still not a great move at all. You want to see about as sharp a move as the downside to the upside to make a decent V-shaped pattern that can get to the high of 1997.75. So we'll be looking at that just as we go to end the show today. So Max, this is what I'm thinking. This is because so much happened overnight and so much happened in a quiet market on Wednesday and Thursday. I would not be surprised if there are a lot of people there that just don't even have shorts or haven't got their shorts in place. So there's a chance that I don't know how they do it, but there's a chance that somehow or other they'll get a rally going so that they can start implementing shorts on what they really wanted to short, never had a chance to. That's number one. So if there is if the selling is relentless, if for any reason, what's today? It's going to be noon in another few minutes Eastern time. If by 2 o'clock there is no bounce to Dow 17,050, 17,070, but instead we start to retest the lows of the day, you got to watch out for a really poor opening tomorrow. That trend will then jump sharply if there's a very negative opening tomorrow. It's how you come back intraday. So if the trend's up sharply and then it pulls back, if the VIX, you see the VIX, once the VIX goes to look, VIX right now is at 2236. So that's high. I've been saying in the 22s to the 27, 28 area, watch out. You got to expect triple-digit down days. But if by the close today, and I'm not sure we can do that because it's acting very poorly, but if by the close today, the VIX index, I'd rather use that than the trend right now. You look at the VIX as well, right?
Yes.
Okay, so I'd use the VIX more than the trend right now. Your question about the trend, and the answer I can give is I'm just not sure. We'd have to wait to see tomorrow if there's a refractive move to the upside, a reflexive move, I mean. So if the trend at 2237 actually drops, it can't drop to 2150s. It's really got to drop under 21, and actually it really needs to drop into the teens. If it does that by the end of the day, and the Dow's only down 250, that would be a level we can watch based on that channel trend line that we just spoke about. Then we might expect an arch formation to form, and then we've got to go look real closely where both the trend and the VIX is, where if the Dow gets anywhere near the 17,250 area, 17,270s, if there is a rally by Tuesday, Wednesday. So I hope I've covered it to a certain extent, but I'm going to be basing it more on the VIX now than the trend. And I think today, unless there's a huge upside spiral, that would say, yep, that particular indicator did work today. So far, I have to think that it isn't really working, and we'll have to deal with it that way.
Thank you, Basil.
Thank you so much for calling.
Happy New Year.
Just Happy New Year to you, and give me an email or just ask me any questions about the VIX or the trend anytime. I always like to try to clarify it if I'm able to. So, folks, thank you for calling. So, folks, let's do this. We've got a question I had was about the IBB being short for a long time. What's your target on that one? Lower. All I can say, 284 will be the 289 to 280 will be the big test. My thinking is going to go lower than that. So that's the answer there. Now, here we are. I don't know if I've got any more questions that I need to answer. We've run out of time. Hey, folks, you got a swimming lesson coming up. Oh, in these deep waters, you want a swimming lesson for sure. So, folks, let's just deal with it the way I did before. A close on the high end of the VIX today, very negative. In the mid-20s, it's just not good at all for the market. You need to get back into the teens to see a decent rally unfold. Thanks for being here. Have a great
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN. TFNN.